Good morning, traders. It is Sunday, March 10th. I'd like to get an early start to Sunday so that you have lots of time to watch this video and prepare for the week ahead. I like to start every one of these videos off with a review of my previous pick. That's the only way that you're going to be able to gauge how effective this trading system is. On Wednesday, we did a live event, which, by the way, Thursday we also did a live event, so please watch for that on my YouTube channel. Click that little live events tab. On Thursday, first time I've ever done it, we had an extensive 1 hour live event specifically to discuss the features in Option Stalker Pro and how we use it. If you're looking for a new trading platform or you're looking for a trading platform that specifically trades this system, please give it a watch. I think you'll be really impressed with a lot of the features that I've incorporated into the trading software. So we did another live event on Wednesday. These are our normal live events. You'll also find those in the little live tab. And I highlighted IBM. I really like this downward sloping trend line that was breached to the upside. The stock is above a VWAP E. It gapped up on earnings and then it spent quite a while compressing. So it was digesting these gains and the stock had already run up into that earnings reaction. So it needed time. Buyers eventually overpowered sellers and profit takers, and now the stock is starting to grind higher. This is exactly why we like to wait 10 or more days to see what that earnings reaction really is, because the stock oftentimes doesn't show us its true colors for a while. Garmin is another great example. I'm going to get to that in just a second because that's one that I highlighted right after the earnings announcement a couple of weeks ago. I really like that stock. A week ago, I highlighted Lyft, L-Y-F-T, and I had mentioned that I loved the chart pattern on the stock and that I planned on using a strategy where we would sell an out of the money naked put keying off of this support at 1550, and we were going to go a month out. Those options were 60 cents bid last weekend, so this is where the video came out. Actually, this is where the video came out. That's a reaction Monday. Monday the stock popped up instantly. Well, I love this little compression here. Finding support at that horizontal was resistance, now support. But the stock did retrace a little bit Tuesday. You had a chance to get that trade off. Those options are currently bid around 15 cents. Would I buy them back in? If I don't need the capital, I've got a nice gain in the trade? No, I wouldn't. I would just leave them on. You've got another 2 weeks till expiration. Just let them wither away. If you need the capital, sure, you can buy them in and you can take your gain on the trade. But I still like Lyft. I like the price action that I see. So let's take a look at Garmin, G-R-M-N. That's one that I highlighted right here after the earnings announcement. We needed to give it time to hold this pop up. And now you can see how it's starting to inch its way higher. I love these stock patterns because from a confidence standpoint, they are continually confirming that the move is to the upside. So you can see this nice tight price action. What this tells me is that buyers are lined up. Every time someone would want to come in and take profits, sell, 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 that supply is immediately met by demand. And that's why the stock never has any big dips. Eventually, this very tight trading channel breaks down, and this is where you can take some profits on it. So it goes through a little bit of a profit-taking phase in here. Nothing dramatic. Now it's starting to march higher. It's got very predictable price action, so it's not chopping all over the place where it's very difficult to predict. So the way that I would play this is it's not going to be a super volatile stock either. I would go out in time, even to the June 21st expiration. I would go deep in the money, and you can see how these options, they're fairly wide bid-ask spread. The shorter term options don't have, the tightest bid-ask spread. That's okay because the stock doesn't make huge moves. It just kind of grinds higher. So I love that type of price action. And if you go into the 130 puts, you can see they'd be intrinsically worth about $12. They're trading about $3 over parity. You can go a little bit further in. You can go to the 125s, and those will have just a little bit higher delta. But there you can see $19 bid offered at $19.60. Maybe you can buy those for $19.40. This is not a trade that you should plan on being in and out of. It's a longer term trade. Just want the stock to continue to drift higher, just like it's doing. Now we're going to take a look at the market, and you can see how we have this upward sloping channel that I've been referencing. And you'll also notice that Friday we had the jobs report and we sold off. We tried to test the upper trend line and we backed off. So that's pretty common, especially with a move of this nature. You can see new all-time high, we back off. And in fact, what I've been noticing is that towards the end of the week, almost all of these spikes that we've had in here, they've come near the end of the week. And then we pull back, we test the bid, and then the market rallies. We pull back, test the bid, market rallies. Pull back, test the bid, market rallies into the end of the week. Well, that didn't happen on Friday. Jobs report, in my opinion, it doesn't get any better. So it does not dispel the bullish uptrend that we currently have. I am as bullish as I possibly can be on a swing trading basis. I'm simply wanting to keep my swing trades conservative by selling out of the money naked puts on stocks that I want to own, and by selling out of the money bullish put spreads on stocks that have really nice strength. So that's the strategy, because until I start seeing a little bit of a pullback in here, that will tell me how aggressive sellers are. But I'm very bullish in here. So we saw a little bit of profit taking on Friday, and we know that we should not chase moves higher to an all-time high. So we start stacking a few candles on that news. Here's why I like the jobs report. Okay, 275,000 new jobs were created during the month of February. That is huge, okay? Lots of robust job growth. But the main component that I was watching is that hourly wages component. It spiked 0.6% back in February. I believe that was largely due to a lot of states increasing the minimum wage. Well, wages are the largest input cost for manufacturers, so it is inflationary. I felt that there was a very good chance that that number was going to come in, and it did in a big way. In fact, that 0.6 number was revised to 0.5, so it wasn't quite as hot as they had initially reported. Secondly, 0.1% is where hourly wages came in on Friday. So it's not inflationary. It's going to give the Fed even more breathing room because they got strong job growth and they're starting to see inflation pull back a little bit. So at least in terms of the wage component. Speaking of inflation, the only real number this week that we should be watching is CPI. And the market's gotten a little numb to all the inflation numbers. I certainly don't see any signs that are going to tell me that inflation is going to spike this week. So although it's a number that we should watch for and we should plan around, I'm not looking at a big negative move. If anything, I feel that the market will continue to test the bid, and once the bid is confirmed Monday, we could even see a little bit of a rally off of the number on Tuesday. If I had longer term swing positions, it's certainly not something that I would be bailing out of or adjusting my risk to account for a real hot inflation number. I just don't see it coming. So the market right now is pretty happy where it is. It's just in this gradual float higher. We opened Friday, market climbs higher. I had urged everyone to wait until we see what this bearish cycle brings. And as it started to unfold, quite honestly, in here, we're seeing a decent part of this move, I started to get a little bit bullish in here. I thought, okay, I can buy this. I like the number. I thought the strong jobs is excellent, along with that low hourly wage component. And we're starting to see some tails under body. And we're bouncing off the VWAP. Okay, so what am I watching for right at this juncture? Well, the more of this bearish cycle that I get to see without any corresponding drop in the market, the more bullish I become. Ideally, as we start getting into the late phases of this bearish cycle, we see a new high, and then we start climbing. That would have been a bullish divergence. I really would have gotten behind that, and I was prepared to. We also didn't have the volume that you would expect when we had this rally in here. So it was not go, gotta have it mode. So that was a little bit of a warning sign. All the while you're waiting for this bearish cycle to run, you're thinking, what would change me from a bullish viewpoint? What would get me bullish? I'm already starting to get bullish. Told you that breakout to a new high for the day would get me definitely bullish. What would get me bearish? Well, a long red candle through VWAP. Oh, okay. We still got a good part of this bearish cycle to run. Now all of a sudden, just one candle. That's all it takes, is one candle to change the tone early in the day. Now I'm all of a sudden thinking, okay, you know what? This bearish cycle is gaining momentum. You can see it's not, 1OP is not waffling back and forth. It is heading straight down. So we get this crackdown and then we get follow through. We get this meager attempt at a bounce to try and recapture this long red candle. That is instantly hammered down. This is your bearish sign. This is your sign that the market is going lower. Well, that's easy to say, Pete. You could just look back at a chart and do that all day. These are comments that I was making real time in the chat room. Okay, so I will put my money where my mouth is in all of my videos. Whatever I tell you, I said previously, go back and verify it. Please do that. That's the only way you're going to ever trust me. There are a lot of YouTube gurus who go back and simply fit their commentary to what's happened in the past. That is not what I do. So this is the tell right here. Have a little attempt. About half of that long red candle is preserved. Had some volume on it. You can see that here. And then we have an immediate smackdown of that little green candle right there. All right, we have one other element. Look at the volume. We didn't have volume on the rally, but we sure have it on the decline here. And that was what told me that we were going to be heading lower. So the market persistently goes down, but not in a dramatic fashion. What does that mean? It means that sellers are just keeping a lid on the market, but you can see mixed overlapping candles, lots of tails, lots of wicks. This is not a high quality trend to the downside. If it were, we would see these two candles and then we would see about 6 or 7 more just like that without any tails or wicks, and it would just be relentless selling. That would be more problematic from a topping formation, because that to me would indicate that there is massive selling taking place. But with a bull market like this, let's flip into that D1. With a bull market like this, sellers are going to be relatively passive. You'll see some profit taking from time to time. It's usually going to come off of this upward sloping trend line, a high plus. And then once that bid is confirmed, then we start to grind and float higher. That's what I'm expecting to happen. So this move down was stubborn. That's because buyers are still there. They haven't completely pulled all their bids. That's when you would see these stacked long red candles. If sellers were uber aggressive, wham, 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 hitting everything in sight, some kind of news would have to be the catalyst behind that type of move. So whatever that catalyst is, there's no credit crisis now, but let's say that there was a credit crisis, some major kind of news that would force the market to have big selling pressure like that. We're not seeing anything like that. This is a normal round of profit taking. Yes, it's come on some pretty decent volume. So come Monday, we want to respect that. We want to see if there's any follow through. We've been looking for a dip for the last month or so, and we really haven't seen much of one. That in and of itself is bullish. So the market comes in, finds support. We get a little bit of a bounce up to VWAP. Then we get another bearish cross in here, and then some selling into the close. So I would not be overly concerned about what we saw Friday, that, oh my God, this looks like it could be a market top. This is what I've been waiting for. I'm going to buy some puts. No, we are in buy the dip mode, buy the dip mode, buy the dip mode. So you buy the dip when you get a nice push higher, then you take profits and you wait for that next dip. And the market will eventually get into more of a stair-step fashion, but right now it's not even doing that. It's just very bullish grind higher, and there's not any really big bad news looming that's going to change what I see right now. So good news is bad news. That's what this move is right here. When you get lots of jobs, it gives the Fed breathing room. It means that they are not likely to ease anytime soon. They've been putting out a July timeline for their first possible rate cut. Powell testified before Congress last week. Consistent messaging. We got the FOMC meeting a week from this Wednesday. I'm not expecting anything new. They're going to pause. They're going to give you the same type of information. They don't need to cut rates. The economy is on excellent footing right now. Got lots of job growth. Inflation is starting to come in. They're going to wait as long as they possibly can, and they'll cite their reason as, gee, we got inflation wrong before. We're not going to make that mistake again. There's no reason for them to add liquidity and to boost the economy when it's already humming on all cylinders right now. So I'm bullish. I'm looking for opportunities to get long. I believe that we're going to see a little bit of follow-through selling maybe Monday after what we saw on Friday. So watch how the market opens. Wait for that bid to be established and know that there's going to be a nice little buying opportunity for you. Now, the one thing that I'm going to also mention is Nvidia, because that has been leading the market higher along with the entire artificial intelligence theme. So all the chip stocks have done extremely well. When you are deciding where you want to get out of a move like this, and I'm not going to call this parabolic because parabolic would be more like this. I mean, it's absolutely climbing a wall. When you get that type of movement and you get a bearish engulfing candle, that's a warning sign. When it's like a skyscraper. Trying to think of a stock right now that might be going through that. I think GE has been pretty, even that's not quite what I would call parabolic, but it is a nice move. It's maybe a 60-degree angle higher versus a 70 or 80 degree. That would be parabolic. When you see that kind of price movement, and then you get a bearish engulfing candle, you just take gains, get out, because you've rode that trade as long as you possibly could, and those are the first signs of selling. And when you get those, you're going to get a nasty backside drop to it. But in this case, we're just kind of grinding higher, and now we've got some profit taking. Even in GE, you've got a bearish hammer. So the stock goes and makes a new all-time high, and then you see consistent selling pressure the rest of the day. This type of selling pressure tells you, okay, there's a temporary high that's in. Nvidia had kind of the same thing going. So I would just let it come in, and there you've got your new high, gaps up, and then you get these stacked long red candles. All right. Let the stock come in. Let it pull back. It's run so far so fast. But Nvidia, I like the theme. I like the fact that they're making money across all fronts. If you think about the applications for their GPUs, they're in everything. They're in phones, they're in cars, have all sorts of automated sensors now. They are used in cryptocurrency mining, which the crypto stocks have been hot. And yes, they are used in artificial intelligence. So any kind of decent pullback in Nvidia, I'm a buyer. So even though you've got this bearish engulfing candle right here, that's a sign that there's going to be some profit taking and some selling pressure. How far will it fall? I don't know. I only know that when it pulls back and it starts to establish support, I'm going to be an interested buyer of it. And perhaps on the way down, I'll be looking to sell some naked out of the money puts. Maybe I'll sell some out of the money bullish put spreads while it's still establishing that support. But with this type of strength, chances are it's going to come down, it's going to find early support, and it's not going to spend a lot of time there. It's going to continue to move higher. So keep an eye on Nvidia. All the chip stocks that came out with earnings last week, Marvel and AVGO, Broadcom, they retraced after the number. You had all the semiconductors, TSM. I could go right down the list. You can look at all the different chip stocks and you're going to see a similar pattern to this bearish engulfing candle. So semiconductors have been leading the market higher. We're going to see a little bit of profit taking in them. Ultimately, if you believe in the AI theme and that is something special that could really drive the market for many years, those stocks are going to be ones that you want to own. And there's certainly ones that you could consider selling some put spreads on. Make sure you have support. These are the first signs that it's starting to crack down or that there is some profit taking happening. Do not short these stocks. That is what fools do. So what you want to do, you know that the market is on really good footing. It has been grinding higher. So you have a market tailwind and you've got the theme that's been fueling the market higher. So that's just not going to roll over and play dead instantly. That theme is going to continue to play out for a long time. So look for buying opportunities there. I would not be looking to short really anything right now. We might have an opportunity on the short side to day trade it. Maybe Monday and a little bit Tuesday, depending on how that CPI number comes in. But I'm not looking for any kind of major market retracement. When you have this kind of confirmation that buyers are engaged, every dip, they're just gobbling up whatever they can. That's what causes this nice, orderly, upward sloping trading channel. And that tells me that any little pullback is going to be a great entry point for long. So that is what I'm going to be looking for next week. Did the hot jobs number, was that really bearish? Is good news really bad news? No, good news is good news. We want a strong economy. Some of the biggest market rallies have happened when interest rates are elevated and the economy is strong. And we have that right now. So get behind it. Don't be afraid. There's nothing to be afraid of. This is nice, consistent price action. And all the way up, everybody, oh, I can't buy up here. Look, the market's run up so far. It's overvalued. I'm telling you, these moves can last for a very, very long time. And instead of having that attitude, your attitude should be buy the dip, buy the dip, buy the dip, buy the dip. It's all you're looking to do right now. It's a really nice market, so embrace it. Let's take a look at some stocks in Green Royal Flush, and I'm going to try and find a trade for this week. Okay, so here's a stock that's actually powering higher, kind of doing that parabolic thing that I had mentioned. You can see on Friday when the market was down, the stock was up. MSTR looks really good to me. Okay, this is on Green Royal Flush. You see me use this search all the time. Heavy volume. I like it. I think this stock's going to continue to go higher. It's got very wide option bid-ask spreads. Sells off initially with the market, and look at that recovery. Coin is another crypto-based stock. And you can see how it also is making a similar move. It finished higher than the close on Thursday when the market was down and when it got smacked down. I like this stock. I like MSTR too. One of these two is going to be your pick of the week. So as I take a look at a stock like this, do I have to go out and buy call options on it? Especially when the market's getting a little kind of weak in here and we might see a bid check for the next couple of days or so. No, I can sell out of the money puts on stocks like this. So let's take a look and see where those options might be trading. See if we can distance ourselves from the action and get some decent premium. I know this stock has decent option premiums. Where would I sell it? Well, this 180 level was horizontal resistance. Now it's horizontal support. I've got a couple of different technicals I can lean on right there. So 180 would be an easy strike price. I don't know that I'm going to get much in the way of credit for it. If the market pulls back Monday and Tuesday and the stock pulls back just a little bit, yeah, some of those options might come into play. But I love that type of price action. So let's go out. And here's another thing is that, a lot of times you look at stocks and you think, well, I know that company and there's no way I'm buying Macy's. Macy's is a brick and mortar department store. And nope, I'm not going to stick my head in that noose. Retail is dead. That's going to keep you out of a lot of great trades. I could say the same thing about coin. Oh, cryptocurrency, it's all fake. There's no value behind cryptocurrency. And I don't trade the cryptocurrencies themselves. My point is that you can look at any stock and go, oh, I'm not going to buy that crap. I don't believe in the company. That's going to keep you out of so many great trades. I've made that mistake in the past. What you need to do is just look at the price action. That's what tells you if institutions are involved. And in these cases, you've got heavy volume, so you know they're involved, and you've got really nice, consistent price action with relative strength. Orange line above zero. That's what tells us. This is the tell. This is the edge that we trade. Okay, just showed you. MSTR, COIN, market down, 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 stock up, up, up. That's because institutions are buying it. They are not worried about what the market is doing in the last 20 minutes, the last half hour, the last day. They are investing for the next couple of years out. And so that's why you see these stocks continue to power higher and move against the market. That's the edge that we trade. So we're trading the market, but we're riding the fastest horse. And COIN is a really good looking stock. And so when you're long these types of stocks and when the market does have a little hiccup, these stocks continue to power higher. And that's what gives us confidence, and that's what gives us staying power. So price action is all you need to look at. And there will be other instances where you're going to look at a chart and go, I love that company. I'm going to buy some. Apple comes to mind. Oh, I love Apple. I love Apple. I'm going to buy some right here. This stock's great. It always goes up. And then the price action is telling you to stay the heck out of Apple right now. Yes, it's a good long-term company, but right now, institutions are selling it. And this is exactly the inverse. Market up, up, up. Apple down, down, down. That's because longer-term stockholders like Warren Buffett, and we just learned that he sold 10 million shares of Apple, which is a sliver of his Apple holdings, was taking some profits on the stock and selling out of it. And there are probably other longer-term investors who are doing the same thing. Our goal is to follow the smart money. And the smart money right now is exiting the stock. And we know that because the market's up. 75% of all stocks follow the market. and the stock is down. That is the tell. Thank you, Pete. I think I'm going to go out and buy some puts on Apple. Well, that would also be contrary to the system we trade because the market is in a strong uptrend. So we should not be out there aggressively looking for shorts. Is there a decent chance that Apple will go down? Yeah, it could. I mean, there are typically a lot of buyers in Apple. What I can tell you is that eventually, with this strong market backdrop, Apple's going to put in a nice long green candle. You're going to be long puts, and you're going to be regretting it. So don't look at shorts. You don't need to be short right now. You need to be focused on buying dips. Apple, I would not buy this dip. It needs to show me proof for an extended amount of time that it's ready to rally. Now, it did not drop a lot on Friday when a lot of other tech stocks did. It tried to bounce in here and it tried to get into this gap. Okay, well, that's interesting. Those are the very first signs that it's finding some support. And you can see. Let's give a quick refresher here. Market opens higher, sells off all day. Apple starts inching its way higher. Well, if I'm supposed to buy the dips, I should buy low and sell high, right? This is a good time to buy Apple because you told me the market's going higher. No! We want to ride the fastest horse. Apple's not the fastest horse right now. And so while this might be a short-term bounce, we know that longer-term money is selling this stock. They are selling this stock. So any little bounce in here to fill the gap and then the next leg lower, you get a long red candle. That happens all the time. That's called a bearish flag. Apple is not in play right now. This stock, this is what we want to buy. But it's already so high. Yeah, and it's going higher. If you look at Apple 10 years ago, you would not have been able to buy Apple at any point in time because all it did was this. It just went higher. Oh, I can't buy it here. It's too expensive. Oh, I can't buy it here. It's too expensive. I can't buy it here. It's too expensive. That whole mentality lasts for like 5 years because the stock just keeps going higher. So you've also mentally got to remove that from your thought process that the stock is too high. I'm not going to buy it. Pigs get slaughtered. Be patient. Wait for a dip. I mean, those are thoughts that are going through your head. The price action is telling you that this stock is going to go higher. And what helps you stay with the position is knowing that at some point when you get a really strong stock, provided that it hasn't climbed a wall straight up, when it's kind of floating higher like this, that when the top does come, you're going to see a double top. And that double top would be where you can exit and take profits and then wait to see if there's more selling because that resistance has been validated. So I like MSTR. Could be my pick. Coin also much more consistent than MSTR. Just nice grind higher. We'll take a look at a few others in here. I'm not going to spend a lot of time in here. I've taken a look at these stocks and I'm going to go through this list very quickly, which is Pop Bull. mRNA. You got this downward sloping trend line that's been breached to the upside. It's above the 100-day moving average. It has a bit of a cup and handle, which is nice because that tells you that buyers on this little dip were more aggressive than they were here. So now we got a higher low. Yeah, I like this. I like this breakout in here. This is a stock that you can consider selling some out of the money bullish put spreads on. You can go down to that 95 or 97.50 level. So let's take a look at that. Let's see what kind of put premium we can get there. This is a biotech stock, so you should be able to get some really decent put premium there. So we'll take a look at maybe the 97, 95, and I would need to get 40 cents for that. and you'd get an easy 40 cents. You get a lot more for that, and you can go further out of the money. So to the extent that you can go down to maybe the 92.50, that would even be more attractive. So let's take a look at a mRNA bullish put spread that we might consider. Okay, so that's 1, 2, 3 weeks out. Let's try and see what 4 weeks gets us and how far out of the money we can get. Can we get down to now we start to widen out the bid-ask spread. So this is very wide. I need to be able to get on a 90.87 bullish put spread. I need to get 60 cents for that. You know, those premiums are a little bit too wide. We can't really see what we'd be able to get off for a spread there. So might have to go a little bit closer and see if the liquidity improves. Typically, the closer you go to expiration, the better the option liquidity is going to be. But I feel very confident down here at this 92 level. This is nice price action. The stock test support, test support, test support, and now it's moving higher. It moved higher when the market was backing off last week. So yeah, I do like this. I like this 92.90 bullish put spread. If you can get 40 cents for that, that had a March 28th expiration. So you've got 1, 2, 3, you got about 4 weeks, 3 weeks left till expiration, and that will generate a 25% return. Again, selling March 28th, 92 put, buying the 90 put, 40 cent credit. So I'll put that 40 cents in right there. That would be your trade. So that's a nice one. I probably won't review this because I'm just trying to give you trade ideas. I really like that MSTR and COIN. So I'm going to take a look at coin. We're going to see if we can get a bullish put spread done here. I like this stock enough to take a day trading position on it. So I'll be watching to day trade it this week as well. Let's see what the March 28th expiration yields. I'd like to get down to a VWAP E, and 205 is where I've got to have my short strike. So 205, 200, that I would need to get a buck for. And you can see it's 60 cents bid, offered at $1.10. I like that trade. And I like it because on the notion that maybe we get a little follow through selling after the price action that we saw on Friday, we're going to start to test and confirm support Monday before the CPI. Could be some nervous jitters with the CPI ahead of it. Again, I'm not looking for the CPI to come in hot. I'm not looking for this to be a major speed bump. We're just looking for a little bit of that profit taking in the market to play out just like it has off of every relative high. We pull back, we confirm support, then we move higher. It's like it's not even a 2 steps forward, 1 step backward process. It's just make a new high, pull back a little bit, make a new high, pull back a little bit. So look for that Monday and Tuesday. And if we get that little bit of market pullback, then we're also going to see this spread widen if the stock just pulls back just a little bit. So I'm not looking for a major pullback in this stock. I don't want a major pullback in this stock. I just want to buy a dip, or in this case, sell an out of the money bullish put spread all the way down to the 205 level in here. And if it's successful in the course of 3 weeks, I'm going to generate a 25% return. I have a strong market tailwind, first and foremost. So my confidence level is very high. I've got the market on a very short-term basis, backing off of the upper trend line in a trading channel. I saw some selling on Friday. I saw some decent volume, so I'm going to be a little bit more cautious with regards to the market. When it comes to stocks on a D1 basis, I do not compromise ever. I'm looking for strength, strength, strength. In particular, relative strength. I have a very strong D1 chart. I've got lots of multiple support levels to lean on. These support levels would have to fail in order for my put spread to be in trouble. I believe they're going to be intact because this price action is telling me the stock wants to go higher. So I'm going to distance myself from the action, selling out of the money bullish put spread that expires in 3 weeks, way out of the money, selling that March 28th, 205 put, buying the 200 put, doing that spread for a $1 credit in 3 weeks. If my thesis holds true on the market going higher and the stock continuing to move higher, I'm going to make a 25% return. That's the kind of trade that I'm looking for right now in terms of my swing trading. As far as day trading, pretty much anything goes. I mean, I can buy and I can short at will. For those of you who are novices, you should be in a mode where you're only looking to day trade from the long side. So Friday would have been one of those days where you sit on your hands, but you know that you're going to have a great opportunity because this pullback is going to set you up with the next move higher. So you just wait patiently, and when that time comes, you're going to have some really nice upside for maybe a day or two, perhaps even 3, where we could see a bullish trend day where you can really get behind that move and add to it during the course of the day. Thanks so much for watching, everyone. Please leave your comments. Make sure to watch that live event on Option Stalker Pro and a live event that we had last Wednesday that filled with lessons. And in the case of the Option Stalker Pro video, you'll be able to see the tools that we have that allow us to find these great opportunities and to set alerts so that we can buy dips when the stock is pulling back intraday. It provides us with a great entry point and it keeps us from having FOMO. Good luck with your trading. We will see you during a live event on Wednesday. Thank you.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.